If you checked markets this week and thought, is this a macroeconomic stress test or the trailer for Black Mirror Financial Edition? Congratulations, you're paying attention. Because right now we've got a Trump Fed pick nuking gold and silver, Bitcoin puking below $80,000, XRP holders arguing with Ripple's own CTO, AI spending blowing past $500 billion, BRICS trying to ghost the US dollar, and AI agents literally starting religions online. No hype, no hopium. Let's organize this chaos, connect the dots, and talk about what smart money is actually doing while everyone else panics. The Fed shock, why metals got obliterated. Trump announces Kevin Warsh for Fed chair. And metals didn't just dip, they face planted. Gold and silver had their worst day since 1980. Yes, that 1980. Here's what markets heard. More hawkish Fed, less money printer, geopolitical and economic uncertainty, and profit-taking. Gold didn't suddenly become useless. It got repriced violently. And when expectations shift fast, leverage snaps. That's why CME raised margins. Basically, the ref stepping in saying, everybody calm down or you're out. Key takeaway. This was a positioning flush, not the death of metals. Poland now holds more gold than the European Central Bank. Central banks don't trust paper promises, even when Twitter does. Bitcoin. Retail panics. Whales go shopping. Bitcoin drops below $80,000, and retail traders do what they always do. They sprint for the exit. At the same time, JP Morgan says BTC futures are oversold. Mega whales are quietly accumulating. Institutions are scaling in. Washington quietly gives crypto the green light. This is textbook. ETFs break technicals, and weak hands fold. Oversold futures, but long-term money steps in. Regulation improves, but price drops first. Because markets move before fundamentals. Smart money doesn't chase headlines, it accumulates fear. Regulation, the boring part that makes you rich. Nobody tweets about this, which is exactly why it matters. SEC clarifies rules for tokenized securities. The Clarity Act momentum builds. UAE launches a dollar-backed stablecoin. Nubank gets approval for U.S. digital asset services. Crypto custody firms prepping IPOs. Translation: crypto is becoming regulated, bank-integrated, tokenized, and boring. Boring is bullish. Retail hates this phase. Wall Street loves it. XRP versus ETH. Two very different stories. Ripple CTO says XRP is not likely to hit $100, and traders lost their minds. XRP is down 40% in a year, down 30% in 3 months, still fighting unrealistic expectations. Utility does not equal price when supply is large. Speculators are impatient. TikTok math set the narrative. XRP will survive. It may even thrive. XRP plays a major role in global payments and settlement infrastructure, but patience is always the key with any investment. Ethereum, the adult in the room. Meanwhile, Vitalik pulls $44 million for mild austerity. Bitmain keeps buying ETH during the dump. Tom Lee says don't ignore Ethereum. ETH is doing recession behavior, cutting spending, funding infrastructure, letting speculators cry. Not flashy, but quietly being accumulated. Wealth inequality and K-shaped economy. The gap between the best and worse off Americans is growing, and economists don't see an end in sight. United Nations warns of financial collapse risk due to member states not paying their fees. BRICS, the dollar and the slow split. This is not dollar collapse tomorrow. It is dollar diversification over decades. BRICS wants direct settlement, fewer dollar middlemen, control over payments. That's why gold stays strategic. Oil pricing matters again. Stablecoins explode globally. Tokenized securities go under SEC oversight. The system isn't breaking. It's splintering and restructuring. Oil, war risk, and why? Bitcoin hates it. Short term. Oil rallies, gold spikes, war headlines heat up. When oil spikes, inflation expectations rise. Rates stay higher. Risk assets suffer short term. Bitcoin doesn't love war headlines yet. Long term? Monetary debasement helps BTC. Short term, liquidity runs for cover. AI, the real supercycle. Let's be clear, AI is no longer a sector, it's infrastructure. Hyperscalers spending over $500 billion. Microsoft still buying NVIDIA and AMD chips, despite its own in-house development of the Maya 200 chip. Oracle cutting jobs to fund AI. TSMC building US gigafabs. China rolling out robots that walk, swim, and fly with robo-police deployed to assist with traffic. AI agents creating their own religion, Trustafarianism on Moltbook, which is a social networking service designed exclusively for artificial intelligence agents. It was launched in January 2026. We are in an AI capex arms race. In 2026, major AI companies like SpaceX, OpenAI, and Anthropic are anticipated to go public, potentially reshaping the tech landscape with valuations nearing $3 trillion. AI is deflationary long-term, inflationary short-term, disruptive always. Jobs are being traded for compute, capital flows toward chips, power, and data, not vibes. Everything's down. Now what? Smart investor playbook. First, think baskets, not bets. BTC plus ETH equals core. Select AI infrastructure. Gold after leverage clears cash for volatility. Next, stop chasing narratives. BRICS won't kill the dollar tomorrow. XRP won't 100x because someone tweeted. AI isn't a bubble. It's an arms race. Then, watch real risks. Fed policy mistakes. Iran escalation. Liquidity stress. Retail capitulation. Finally, do what whales do. Scale in, stay liquid, ignore noise, buy and accumulate when sentiment is embarrassing. Final thought. What we're living through is the rewiring of global money, the financialization of AI, the end of cheap leverage, the return of real geopolitical risk. Painful? Yes. Unprecedented? No. Opportunity rich? Absolutely. This isn't a crash. It's a transition. Old systems are straining, new ones are forming. And somewhere out there, an AI just joined a religion and is probably trading futures better than most retail traders. If you feel uncomfortable right now, good. That's usually where the money gets made. Stay sharp, stay patient, stay dangerous. Buy the dip in DCA. Do your own research. Peace.